Welcome to the Trading Lounge and the day ahead report, and also the summer solstice today. So here we're looking at the Dow Jones, and there's two wave counts that that can be played out through here. One of them is the original one we've got here with looking for wave 4 to pull back and wave 5 to move up through here. The other one is a corrective pattern. So just bring that up through here. The corrective pattern is the A wave down to here, the B wave back up 61.8%, and then the C wave to the downside. This structure's got to come in because on the Dow Jones, on the cash market, this low here on the cash market has overlapped this one here only slightly, but on the actual cash market that has a bit of meaning, so breaks an Elliott rule, so that means that we have to look at this as being a B wave up and then a C wave down and then up through there. Either way, we would be looking for long trades, we'd be looking for support on top of 13,300 here. It needs to be sort of sold there. If that's the case, then not just trading above it here, but retesting is more important than the breakout. So once again here we've got the breakout, but the retest fails. If it develops support this time, which it could do, then we need to trade what we see, and we'll be on the long. You need to be on the long side from that point there. The European markets are still heading to the upside, so we've got the DAX here obviously heading up towards the 7700 here. We can see this little wave structure here of the 1 and the 2 and the third wave still unfolding in through here, so there'll be a fourth and a fifth still to go through here, part of a larger structure of the 1, the 2, then the third wave to here, which is the 1, 2, 3, 4, 5 into there. So third, the fourth, fifth. So a little bit more to go in there, and then a reaction there. The FTSE will be the same as well, if we can find that. Yeah, it's still moving. Should take out that high through there, up to here. But we can expect lower. Well, this is the whole thing really, because normally we can expect lower volumes coming into Christmas. However, the idea or the process of working to a solution for the US debt is obviously buying the rumour, sort of sell the fact type of thing, and that's what's going on, and it's really keeping the market buoyant. This is more so when we have a look at the base metals in a minute, because the base metals and precious metals are really weak. This is the Australian market here. Essentially, we're looking for a larger correction across the 4600 through here, but while it's got support on the 4630, which is the top of subgroup 1, then we need to remain positive with that as well. A breaking of this, the 4627, would be a sign of weakness here, and there is weakness too, because it's quite strong through here, but you can see these overlapping wave structures, and what I mean by that is the move down through here overlaps this one move down here overlapping this high here, so that's like a market creeping, and it's a sign of weakness. So just bear that in mind, and we would expect a larger correction under normal circumstances to unfold across the 46 here. If we've got a larger chart here somewhere, it's large there, larger still. Okay, so 4600 here. So we've got the arrival, the reaction, the first high above the level. So then we'd be looking for this trend here to be corrected. So an A and a B and a C here, and it may even be still part of this larger one at the 4500 here. So I need to be mindful of that as well. But we'll stay with the trend as well. That's an important aspect of it as well. And the ASX 200 has got a habit of, when you have a look at its previous bull markets, it's got a habit of continuing climbing higher with shallow retracement. So I'm mindful of that as well. So taking it all into consideration. But the base metals, there was good volume in the Australian ASX market yesterday. If I can just bring that up through here, as you can see here. So it's still very buoyant to the upside. And the base metals, as I mentioned, are not really affecting this price just yet. Let's have a look at copper. Just before we have a look at copper, this is the UBS commodity index, and a bit like the CRB index, commodity index as well. So it's all the commodities sort of bunched up in there. But what I want to point out here is that we can see that we've got like wave 1 here, wave 2 here. We've got wave 3 unfolding down through here. There's a small wave 4 here and a wave 5 here. So there's still lower to go in here. So we can still see this, continue to the downside into the 138 there. So the general trend for commodities is to the downside. When we have a look at copper here on the 4-hour chart, we can see that we could see the other day that this pattern sitting on here was corrective, so expecting a break for the 365, and it's really moved strongly to the downside, and it's still got further to go to the downside. We know that the support is over here as such, so we'll expect this to go down. But I also think this is interesting as well because this pattern is a little bit like gold as well, but slightly different in terms that this whole move up through here is very much like gold on the daily chart, so to speak. So it'll be interesting to see if this is the A, the B, and the C here, then this low would be taken out through here, and then that would also relate through to gold, which is also very weak at the moment as well. So this is the gold here. So we're looking at this is the medium level here, 1650. So it's normal to see a bounce from the group 1 area, the 1600 here, 10, 20, and 30. So we'll see buyers come in here to see a retest of the 1650 is normal, and some sort of consolidation pattern here, like this here and like this here. But in here up against the 1650, and then move to the downside. Continuing to the downside, which there is support there as well. If I can just find a larger chart. Okay, so just looking at the patterns. I mean, we're looking at a 4-hour chart just before, but the 4-hour chart on the copper has got the same pattern as this one up through here. It's all the same in here, all the same shoot up through here. So the copper one's moved down really quite sort of strongly. So we need to take this into consideration here as well. So there's also support here as well. So this is the actual sharp move that's going to be occurring through here. The 1650 is the medium level, so there is going to be some consolidation in the price action through here. But once you can see it as retested resistance, then you can take the next trade to the downside of the 1600. But it's going to get choppy once it gets down through here, and perhaps even another bounce back to the 1650 from the 1600 here. The oil market, oil follows stock, and it's moving to the upside through here. So we're still looking at a little fifth wave up through here. So we'll stay with that. But the main point here is that the price is not really going to go anywhere. This is also a medium level here, 90, and it's a strong number. And the price is really going to stick around here. Normally they'll go to the next number, the 91 here, if it can find a bit of support here. But expect a larger correction in this space through here, and just allow that too, because normally with you're trading from one number to the next and then you get out. You make money in a trend, but you'll lose it in the correction. So because you basically can't leave it alone. So because it's given you money before. So it's tricky what to say or do, but essentially you trade to a number and you get out, and just allow the correction to unfold, and when it matures and you can see what side of the price it's sitting on, then you make the next decision. It's a bit like this one here. It moves up through here. If I was trading up through here, I'd trade to the 86 50, that's number there, and then I'll just wait for it to unfold. And if I'd seen it develop support at some point with a bit of patience, then you can move in on new highs and so forth, and you know where to put the stop, and that's how you do it. It's really quite simple, but you just need a bit of patience to do it, and this is what's going to be required here as well. Alrighty, let's have a look at the Forex, and that's all still going according to plan. Okay, the US dollar Still going through its bouncing off the 79 here, so we've got our 5-wave structure to the downside here, which would be also a wave 1 here, and we're looking for wave 2 to come back, normally to the supply area up through here, so expecting a larger correction to come through here, but it's not really getting up there, is it? So it just may be a shallow correction. So if it fails to find support on 79.30, if it fails to do that and it continues down, then you know it's moving further down. But support on the 79.30 here would see further upside. And that's the same with the euro to the downside as well. So with the euro here on a 30-minute chart here, we're looking for an ABC correction, and as you can see, it's pretty much sort of played out. So we've got a nice B wave in through here in terms of, it's always in 3 waves, an A and a B, and then a C wave in 5 waves here, the 1, the 2, the 3, the 4, and the 5. Pulled back up further than 61.8% of here. That's why it's important to follow the actual structure. Also with the wave C to the downside, I'll be looking for 5 waves down. I haven't pulled this apart in 30 minutes just yet. This may be the wave 4 here, so we may see still one more wave to move down. In fact, it's normal to see the wave C take out the low through here. But you know, when the B wave moves up so high, it means that there's some strength in the market. So the wave C may not come all the way down, so it'd be more of a flat type of correction. If the wave B was very shallow, then the wave C would be further down. You know what I mean? Sort of got that sort of look and feel about it, and sort of strength and weakness about it. So, but anyway, give it time. If support is found on the 132.50, then you can look at long trades from that point. If it fails there, it needs to retest the 30 there, just because it's above the subgroup 1 there. It hasn't tested it yet, so it's not supportive yet. But at the same time, we don't want to miss anything. But the next step would be up on the 50 here. The Australian dollar, it looks like it's working itself a little bit sort of lower through here. I have to label it both ways here in terms of an A wave down, a B wave back up, and a C wave down in 5 waves here. But it also can work into a larger impulse wave. So large impulse wave would be 5 waves, so we'd be looking, instead of having a wave 3, C here would have it 3, then 4 coming back up to the 4th wave of 1 lesser degree, and then a 5 wave structure down for wave 5 through here. So that's a possibility. Just have to allow that to time to develop. In terms of if the market does push higher, what I mentioned yesterday is that it's good that the market moves down below the 105, because it's testing the demand. And if it's found and the market eventually finds support back up on the 105 here, then you know that it's tested lower, it's got buyers there, and those buyers will move up. So move up above the 105 and then a retest here, and once you've got the support there, then you can build your trade from that point, because then you've got, if you've got some proof that the low's in place, it's tested lower, you've got the psychological factor of being back above 105, all those sorts of things. So it's tested properly. So that's where the long trade would come from that point. Yeah. Alrighty. Well, that's just about it. So regarding our service, the Forex will continue to the 24th and come back on the 2nd of January. This report, the day ahead report, will come back on about the 15th of January, and with the robo trades as well. As normally there's not a lot of volume that comes into the markets until after Australia Day on the 26th of the market. The big hedge funds don't really sort of rock back in until the end of January. So we won't be missing a lot. But that said, if you're around, they're still the markets are pulsing to the upside. So based on the solution for a fiscal cliff, so I could be proved wrong on the volumes, but that's how we're going to play it out. I'd also like to thank everybody for your support. Without your support, we wouldn't be here. We really enjoy what we do, and just a big thank you, and enjoy the break, and we look forward to seeing you next year. So we've got our annual little song here for you. So here we go. We wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas and a Happy New Year. Yay! Thank you.